Good morning, everybody. This is Paul Harris calling from Oreninc. .com. I'm here today for our regular podcast with Mickey Fulp, the Mercenary Geologist. Good morning, Mickey.
Good morning, Paul.
It seems to be exciting times. Gold seems to be going from strength to strength again. And since our last call a couple of weeks ago, it's moved even higher. And this morning, as we're speaking, it's at sort of 12.58. How do you see the strength of gold? Do you see this continuing, or will it eventually sort of run out of steam like it did last year?
Well, of course, that's a $64,000 question, Paul, but I'm very encouraged by the fact it's risen in stepwise fashion. So we haven't seen uh, an exponential rise. It goes up a bit, levels off, goes up a bit, levels off. So I'm looking at a 60-day chart right now, and it keeps making higher highs and higher lows. So from a technical point of view, that's a very strong chart. Um, a lot of the recent move, I think, is safe haven buying. As Trump rattles people's cages, gold has once again become a safe haven choice uh, for preserving wealth.
Okay, I mentioned that the rally gold had last year sort of petered out sort of mid-year going into the fall. Um, do you think that it'll be more robust this time around?
Well, Paul, it reminds me a bit of the period from, say, early 2002 to maybe mid 2003. We had a bit of a run up in gold price, and then it took a break, and then it started again. And so, from that point of view, it looks very much like an incipient bull run. Uh, I think it went up too far too fast last summer. If you look at a chart, say from around the 1st of June until mid-August, it was that exponential rise, which we generally do not want to see. And then it took a step back, and I think that was needed. Um, this time looks like a more well-behaved market, if you will.
Okay, we've certainly seen the Oreninc index topped 100 a couple of weeks ago. It remained over 100 last week, so there seems to be a lot of strength in coming back in the Canadian financial markets, particularly in the gold space, but also lithium's received a lot of play, uranium as well, and even copper coming back in with some financings. And this week, as we're speaking, the BMO Metals and Mining Conference is underway near Miami, Florida. So, do you think we'll start seeing or we'll see some more sort of bought deals and more financings coming out on the back of this? Obviously, the BMO sales guys and bankers have pretty much a captive audience for sort of 2 or 3 days.
Well, yeah, they certainly do. And historically, this is a time when deals are made, especially bought deals, but really most private placements. The first quarter of the year uh, generally is when both the juniors and the majors are raising money. So from that point of view, I would expect some deals to come out of this BMO conference. It's one of these increasingly popular one-on-one, for lack of a better term, speed dating conferences, uh, and we see a number of organizations doing this now, getting away from perhaps the exhibit booths and more into where you schedule meetings with companies, and it works both ways, companies, analysts, high net worth investors requesting meetings with whoever, and it's you go into a space, and it's a very intense one-on-one, and you learn about companies very quickly.
I know I've sort of participated in several of these, Mickey, and they are can be quite exhausting, and you
Yes.
left sort of I don't know almost trying to remember who it is you've met, and it is I think very hard for a company to make an impression when for example a fund manager is perhaps seeing 20, 30, 40, 50 companies over the course of a couple of days. So it is I think a sort of tough but useful part of the financing promotional cycle. Um, Talking of which, we're now a week away from PDAC, which will see sort of tens of thousands of people converge on Toronto, particularly looking at the sort of junior explorers and development stage companies. Are you all ready? Have you got your bags packed and your winter woolies tucked away, Mickey?
Well, I don't have that done yet, but I travel so much, it doesn't take me very long. I certainly know a lot about the wintry wind tunnel of downtown Toronto in March. It's my weekly dose of winter coming from the Southwest U.S. And I posted a piece to subscribers on Friday, and it'll come out to the general public today. The Mercenary Geologist Guide to PDAC 2017. It's a quick read, and it's a little plug for myself here, if you don't mind. But and I try to write it in a bit of a tongue-in-cheek manner. But last year, 22,000 people in attendance. That's down 1/3 from the peak of 32,000 in 2013. But I expect attendance to be stronger this year. I think there's about 500 companies exhibiting. That's way up from last year. And I expect the mood to be robust and boisterous, and especially after it gets dark and the hospitality suites come in.
Oh, yeah. With 500 companies, Mickey, how do you put together your schedule? There's only so many hours in a day. You've only basically got 3.5 days. How do you cull that 500 down to, I don't know, 20 companies that you can hope to spend some reasonable time with?
Well, I write about this in my piece, and I really write it not for analysts and newsletter writers and professional investors like you and I are, but for the retail lay investor. And I think you gotta get the brochure. You can get that online, or it's mailed to you one way or the other, and sit and look at the companies and make kind of a short list of companies you're interested in for people's share structure, project, commodity, etc. And then you get out the map and you sit there and you map out your day's visits. Once you get on the floor, it's just a zoo on the floor. But if you approach it kind of logically, I think you can get some work done. For me, I don't go to the PDAC to specifically look at companies. I'll end up doing a bunch of interviews. I don't spend a lot of time on the floor. I try to schedule meetings with companies I'm involved with, or maybe choose to be involved with, or looking to be evaluate. I try to schedule those outside the exhibit hall itself. And generally, I try to get them outside the convention center, because otherwise you're going to be interrupted by someone, some long lost friend who you haven't seen for 20 years. So it's a bit of a challenge.
Now, PDAC, you talked earlier about the first quarter being the sort of main financial window for juniors and majors to raise money. In many years, PDAC seems to be the sort of de facto end of that window, with financings tending to trail off after PDAC activity in sort of main, the gold market, for example, falling away. Do you think that will be the case this year?
It's always hard to tell. It was not the case last year. Last year was quite an anomaly. The markets started to move at and after PDAC, especially the gold price started going up. So the Toronto Venture Exchange, which is my sweet spot, I'm not really involved with the producers very much, but the gold price hit its high in the summer doldrums, as did the Toronto Venture Exchange Index. That's an anomaly. Generally, what we see is a fall off of financings. We will, and that's uh, normal, because this is the time of year companies raise money. They're getting ready for their next field season generally. Of concern is oftentimes there's a sell-off of especially speculative juniors after PDAC. Some people call it the PDAC curse. I prefer to call it the PDAC hangover, as as we all know the reason for that. But increasingly, I think as professional investors have seen the run up preceding and during PDAC, and they look at that as a selling opportunity. As I'll go out on a limb a little bit and say, well, we've seen a rising Toronto Venture Index until the last couple of days since basically December 20th when it hit its tax loss selling low, and that's normal for the rising market. We would generally expect the venture index to move up through PDAC and then perhaps drop off a bit because people do take profits. And I'm one of those people. I'm a trader, so your value of your speculative assets or any asset, equity asset, is nil. You don't have a profit or a loss until you sell. So I like to take profits when they're available and take money off the table and go and do it again with another undervalued company.
Well, that's right. At some point, if you're a successful investor, you have to sell.
Absolutely.
Okay, well, I think that sort of draws us to a close for now. We'll be back again with Mickey in a couple of weeks' time, post PDAC. So we'll reflect on the event and we'll see what has happened with the market, whether it continues to stay strong and plough forward, or whether we have that hangover that Mickey mentioned. Thank you once again, Mickey, for joining us this morning. It's been a pleasure as always, and look forward to seeing you in Toronto.
I look forward to quaffing a beer with you in Toronto, Paul.
Thanks very much. Safe travels.
You too.